Good afternoon, everybody. We still have a few seconds until 11 a.m. Eastern Daylight Time, so we're going to give the rest of the audience a few seconds to come in, and then we will get started. Got a good crowd today so far. Okay, good afternoon, everybody. Welcome to Afternoons with Aces, the cloud reporting series. This is, I believe, session 9, FRS balance sheet, actual and budget sheet and trend. Budget and trend, excuse me. All participants should be in listen-only mode for the webinar. If you do have questions, please put them in the chat or the Q&A, and we will try our best to get to them during this session. We are live today. This is a relatively short presentation. It should only take about 25 minutes to go through, so we will have time for questions and answers. Let's try to move the slide and see how well we do here. All right, so first thing we'll do is go through introductions. We'll go talk about how to access Financial Reporting Center, how to launch a Financial Reporting Center. We'll talk about the report components, the body and the main report components. We'll go through dimensions, and then we'll show you a very simple balance sheet to do actual versus budget, and then we'll show you how to do a balance sheet and trend. I just realized I'm used to having an intro, so I should have done my good morning, afternoon, or evening, everyone, depending upon where you are in the world, just so we can kind of keep this somewhat consistent. All right, so I will pass the microphone over to my brother from another mother across the room for a brief introduction. Lee, you want to go ahead?
Absolutely. Thank you, Tom. And wow, this is live and wow, it's good. Okay, my name is Lee Briggs. I'm the Cloud Practice Director here at Creel, now a fully owned entity of SMX. I've been working with Oracle since 2001, started with EBS Financials, kept that all the way through till 2013 when I switched over completely to cloud. Got my degree, got my master's. I am an Oracle ace. We have renewed that has been renewed for another year. So that's something I've kept on now, I think, for 8 years, I want to say. I was also OATUG Star Presenter of the Year, the first year that award was created. That was back in 2014. Tom.
Thank you, Lee. I, too, am with Creel SMX. I am the Commercial and SLED Practice Director. I have a Bachelor's of Arts in Economics and Business Administration from Renaissance College, and I got my law degree from the James A. Beasley School of Law of Temple University all the way back in 2002. I'm also a certified public accountant in the state of Pennsylvania and New Jersey. I'm an Oracle ace. I am lovingly referred to in the Creel universe as the second ace, because obviously Lee was the first ace. And I, too, received the OATG Star Presenter of the Year Award in 2017. Also number 2 on that one. Just a quick announcement to the folks who are online. Both Lee and I will be attending Oracle Cloud World in a few weeks out in beautiful Las Vegas. If you are there, please do look for us. We are on Twitter, so you can certainly tweet at us. And we have that information available on the last page. All right, a little bit about a recap. So hopefully a lot of you folks that are on this have watched the prior episodes. And if you haven't, you can certainly go back there on YouTube, as well as on the Creel SMX website. But, you know, our main belief with reports is that reports start with a really good chart of accounts. Now, if you have a good, solid chart of accounts, your financial reporting is infinitely easier, okay? General rule of thumb, and we went through this, I think, on episode 2, chart of accounts design. If you want a financial report by whatever it is, it has to be in your chart of accounts. right? So if you need a report on a P&L by project, even if you have the project subledger, you really should have project as a segment in your chart. But the main driver, at least for financial reports, is a really good hierarchy. And Lee and I have a very specific way that we do our hierarchies. It is the way that we've always done them. It is logical to me. And it really breaks it down into a trial balance, right? So your hierarchy, if it's done right, if you run a trial balance or run a very simple smart view report, it really should almost look like a balance sheet and income statement in one single column. And what we have here on the screen is Lee and I always have a T as our parent. That kind of probably goes back to, I'd say, our EBS legacy experiences, because in EBS you used to have these things called summary accounts, and summary accounts operated similar to how SBase works. SBase, when you have parents, it rolls things up automatically. It doesn't calculate them on the fly. A parent account in EBS did not store information. A parent account was used kind of as a roll up, and it used SQL to roll it up dynamically. Whereas a summary account, you stored information, and it made your calculations faster. And when you did it, a summary account for all accounts, you typically use T. So Lee and I have kind of adopted that in cloud. And then we kind of go down. Lee and I, again, generally, we do not like alphanumerics in our children account. And the reason is that comes from me. I was a staff accountant for years. I entered AP invoices, I entered journal entries, and it would have annoyed the heck out of me when I was entering and coding transactions to take my fingers off my 10 key. So I really like my natural account segments to be numbers, and then separated by a period. Just makes it a little bit easier. But we're a big believer in alphanumeric for your parents, right? So your assets can only have the word parent, literally the word assets. And you see some good examples here. So if you have a really good hierarchy, think it through, make sure it's logical. It really will make your reporting easier. And again, the rule of thumb that Lee and I have, for every line that is going to be on your balance sheet or your income statement, you should have a parent account. The reason for that is if you maintain that hierarchy well and using the current hierarchy and build using the parents, you'll be maintaining the parents, but the report will be self-maintaining. And we always like to say, if you do your job right, you'll either maintain your hierarchies or you'll maintain your reports. If you do your job poorly, you're maintaining both of them.
Tom, can I just pause you there for 1 second? We've had a couple of comments coming in. There's a big gray box in the middle of the screen. So I know that you can't see it on your screen. Can you just stop sharing for a second?
I sure
Bill,
can.
for a second, and I'm going to try and present and see if that gets us out of the way.
I will do my best. I'm going to stop sharing. Thank you for the comments on the screen, ladies and gentlemen. So sorry. And that's why I don't usually pilot these things. All right, Lee, thank you so much.
Thank you for the anonymous comment out there. Don't know who it came from. Thank you. Resolved. We're good to go.
All right, we move to the next slide, Lee.
Well, actually, so we're going to keep on this one. So today's session is around the balance sheet. So I wanted to come back to this. I wanted to call back to this slide from our second episode, just to kind of talk through why you're going to see, as we build this report out, it done in the most simplest manner, right? So as Tom said, every segment we have in our chart always has a T at the top. Everything's going to roll to that. But we deliberately design our natural accounts to have 3 direct children that roll up to T, and they are assets, liabilities, and equity. Assets is going to have all the assets in there at some point. You break it out however you do, whether it's current assets, long-term assets, with parents underneath that. Liabilities will do the same kind of things. You have the current liabilities, long-term liabilities. But equity is going to have your true equity, your true retained earnings, as well as your parent out there for your essentially getting your year-to-date net income. So we're focusing on that hierarchy, because as we start building out this balance sheet, you're going to see we're essentially just looking at three values out there. That makes sense?
It does. And I guess the last thing I'll say, Lee, is the reason we're focusing on the balance sheet on this one. The last session we had focused on the income statement, and bear in mind, again, if you haven't watched this session, you go back and do it. If you do your hierarchy right, Oracle has a program that you can run to build some really nice trial balances, and it'll build a pretty nice looking P&L. It does not build a balance sheet. So we're going to walk through the steps to do it.
Yep. Okay. So we are going to go to how we build this document. Again, the navigation for this is the same as it's been for all our reports. Assuming you've got some kind of reporting role out there. So whether it's general accountant, general accounting manager, report analyst, I think it is. We're going to go to others. We're going to go to Financial Reporting Center, which starts getting the screen in the top right. As soon as you go to Financial Reporting Center, it's going to open up a new window. You're then going to go to Tools, Launch Reporting Web Studio. Get us to a new page, which will be kind of blank. We're then going to create our new report. So we're going up to File, we're going to say New, and then we're going to say Report. Again, this is the same thing we do for every one of our reports, but we want to make sure it goes there. Now, every report we build with FRS is going to have, can have three components: the header, the body, and the footer. Header and the footer work exactly the same as they do in Word. Literally, typically have like your header would have maybe the name of the report. Any of the parameters out there will talk about that in a little while, or the dimensions you're storing in that report name. Footer, I've seen people do like page, maybe page numbers, confidential, something like that. But it's the body of the report that is really the part that we're focusing on. We're going to go to the grid. As soon as you go to the grid, it's going to ask you to select your data source. So this is each of the individual cubes you have out, the cubes out there that we're going for. So we built this in a demo instance. Obviously, we have a ton of data sources out there, and we are picking the data source for our specific chart of accounts, this US chart of accounts. One of the items we have commented on before, these database connections, if you do the install correctly, as we've talked about on the previous in previous sessions, this connection will be built for you out of the box. Oracle actually does a decent job of that. If you don't do your implementation correctly, if you don't use the tools that Oracle has, you will have to create a connection. You want to make sure that that connection has a realistic name. You don't want to call it prod. You don't want to call it dev, test, whatever instance you're in, because when you start cloning around, those names are going to start being nonsensical. By call it prod in prod and clone prod to test, that connection in test is still going to be called prod. So we typically go with, if we're creating it manually, or if we're on one of our assessment opportunities or rescue gigs, as we also call them, we will make sure that we build those connections correctly, so that when you start cloning around, you have that you don't have that issue anymore. Okay. Once we have got our connection in place, we then start building out our layout. Where do we want everything to go? By default, as soon as you go into the screen, all your dimensions, which are your chart of accounts plus some others, will appear in your point of view. And you're going to start dragging and dropping these for where they need to go. In our case, for this specific report that we wanted, which was a balance sheet, actuals against budget, we've broken out the dimensions like this. The rows are the easy part. That's where your natural account is going to go. It makes all the sense in the world. Your scenario is going to probably be the columns, because we want actuals and budget. That's a scenario. We're going to have those out there. We also put our balance amounts and amount types out there in those columns. Now we do have some page breaks out here. So for our page breaks, we are having a counting period. So we ran this for multiple periods. We'd actually get separate reports on each page. And we left everything else in our point of view. Tom, you got anything to add to that one?
No, I guess I apologize. Yes, I do have one thing. So the screenshots that we have in this deck, just for clarification, are actually from the legacy version of the tool, which means, the client side version. Oracle has had a web version of Financial Reporting Center for a couple of years, and just as a kind of a preview, the EPM guys are usually a little bit ahead of we ERP folks on this tool. So the EPM guys had access to the web version of this tool about 3 years before ERP did. In the EPM version of the tool, there's even a better version of the reporting tool that's coming out. It's a lot more friendly, a lot easier to use. So if you're looking at these screenshots, like, boy, mine looks a little different. It does, because these are from the client side version. The biggest difference that's a benefit to the web version from the client side version, you are not limited to the order you drag things in. In the web version, if you drag scenario before balance, you can drag balance and move around a scenario. In the client side version, you had to remove everything and put it in the exact order that you want. So you do have a little bit of options. The other thing I would say is, and Leo kind of hit this. When we build these reports, this is a Lee and Tom trick. We did not put this in any of the slides, but I will give it to you. We tend to build these reports first in SmartView, mock them up in SmartView and make sure it's going to look the way that we want before I build them in FRS. SmartView is not a reporting tool. I will get debates among my EPM brethren. I think it's an analysis tool. You can certainly use it to build reports, but in my humble opinion, this is a better tool for building pixel perfect reports and sharing them. But it is a lot more friendly, and a better version is coming. Hopefully we'll hear some good news about that in a few weeks out in lovely Las Vegas. Lee.
By the way, you did sound like an old man there with back in the olden days.
Mm.
Did you have to walk uphill as well to school?
Both ways.
Both ways, okay.
In the snow.
Okay. Okay, we talked about our layout there. Okay, now let's talk about a couple of the other tricks we have out there. We always have, formatting is going to be an issue. Oracle keeps all the balances with their natural sign. So any debit balance, typically your assets, is going to be is going to be stored as a positive number. Any of our credit balances, so typically your liabilities, equity, maybe your revenue is going to be a credit balance. So it's going to be a negative number. We're talking through the tricks that we use here for this formatting. So we've selected our specific row, and again, we're going to bounce around this a little bit. We've selected our specific row. We always typically do this at the row level. We've gone to formatting, and you can see here that the sign on the right-hand side is scaled by 1. It's taking the number and just and multiplying it out there. We're going to go through another section for assets, and we'll come to liabilities just to show how we deal with this kind of stuff. So there's our formatting for our assets. The other thing we're looking to do here, and again, this is now kind of the report built out as a whole. We've had 4 lines on here. The first line you see there is our total assets. Our assets parent, we're literally just bringing in 1 row. You could expand it. We didn't worry about expanding for the purposes of this session today. We didn't just say show the children. Again, we allow expansion, so you can see a carrot out there and expand it out. But you could use the same report and say, just get me the children of total assets, children of 1,000, and we list those rather than just giving a sum. But we've got our rows there for assets, liability, equity. That last value you see there, 95,001. Again, I don't use that rule. They have that is the net income parent we have in the demo instance. Typically, I would roll that in under the total equity section there and see how that report's built out. A couple of other things we're showing on here. We're showing some custom headings. So this specific row 1, we've selected the cell that we're going for, so it is bringing in that account value. It would show whatever the heading is, the description is for that value. We actually just want to show a heading of assets. That's all we want to care about. That parent could be called Bob for all I care. We want to show the row as assets. So we've selected the row, or we've selected that cell. On the right-hand side, your heading row properties comes available. And we've clicked a custom heading and said assets. The other part we've done on there is allowed expansion. So for this specific parent, as it is a parent, you can expand it out. You'll see a little carrot when we start running it. I think it's an orange carrot in the top left. You can, there's a triangle on the left-hand side. You can expand it. It'll show all the children underneath. We're also showing our 2 parents out there. Our 2 columns out there. So column A, we see that our scenario is actual. Column B, we show that our scenario is budget. That's how we're getting our actuals. And budget is looking for everything that meets our criteria for row 1, which is all our assets. Get the actual in column 1, budget in column 2. Make sense?
Sure does.
Awesome. Now let's go down to our liabilities and owner's equity. This is where we start playing around with that formatting. We went to the same place that we looked at on our assets, and we're changing the math now. Now we're scaling it by -1. You're going to say to me, hey, Lee, when I go into the screen, it's not a value that we have on our dropdown. It's not. You can scale this by 1, by 1,000, by a million, by billions, whatever. I think it's even get down to percentiles. But you can't pick -1. Not a problem. Type it in. You type it in, it will accept that, but that will scale all your values you have for your liabilities and equity by -1. Essentially turns a credit into a positive. And this is one of the discussions we always have with the EPM, even on interviews with EPM folks, we always go through this. EPM folks love to switch the sign when they load balances. They love to do that, so they don't have to worry about this on reports. Never been a fan of that, because if they bring over all the balances, you've got no clue whether it balances or not. because you can't get a balanced balance sheet. Every number is a positive. So the option you have even on the EPM side, you do the same thing, is on display, switch the number. If you have a debit balance in liabilities or owner's equity, it's going to show it as a minus number. Again, from a reporting point of view, you would probably want it that way.
Okay, and just a quick note, by the way, this screenshot's not entirely correct. The negatives, the brackets should be still on the negative side. And a couple other notes on that. It just scales how it's presented. It does not change the behavior, meaning it's, Oracle still knows that assets are debit balance. It still knows liabilities are credit balance. If you want to quote unquote net the two, you add them together, right? EBS work the same way. Cloud works the same way when you do an OTBI report. So again, Lee and I have a bug up our behinds about not flipping signs. I'm a firm believer there's no reason to do it. And if you use the reporting tool the way it is, you can do it. And I guess the last thing I will say is, if you want to get your reports from SmartView, you can use Excel conditional formatting. I did this. It was not that difficult to do. I essentially did a conditional format that any row that started with a 2, a 3, or a 4, which in our test chart accounts was liabilities, owners, equity, or revenue, flip the sign. No problems. Worked relatively well. We did that in SmartView. Yeah. Thanks, Lee.
No worries. The other part to actually throw through this is Oracle still, Reporting Studio still knows what the true sign is when you do variance. So one of the columns you can put in there is a calc with variance or variance percentage. It still knows, hey, this is revenue. I know that this is how I get my math. Expenses, I know how to get the math. It still follows that same logic. You may have to change the formatting for that calculation column to show the correct number, but you're still getting the math correct there. All right, we've talked through our formatting. The last part we're going to look at for this part of the report is our report title. So we did talk about bringing in variables when we start doing our report titles or functions. So one of the things that I always like to do is save the report with the real name when you're saving it to the instance. So, and on every one of your financial reports, just call that name. If you've changed the name from balance sheet actual v budget to balance sheet actuals and budget, the report is going to update itself with the title as it goes through there. And we do have a session there. Again, for this one, we are bringing in the report name as of, and even figuring out what the period is, so you can display it on there. Again, from a display purpose, it makes sense for the consumer. They know what they're looking at. They've got the real report name. So if they want that report run by something else, they can at least give you the name out there. And it also shows the period. So if they're filing these off somewhere, that they have those names. Okay, what does our report look like? It looks like this. Again, this is a dummy data, but this is what we're looking for. We have a single report out there. We've got the title. The report was called Balance Sheet Actual B Budget. That's the report name. That's what's displaying in the heading. We've got the period name out there. In the demo instance, period names are numbers. So it is 01-23. We've got that in there. We can see we've got the page breakout there showing that this is for the period, for the currency, and for the type of currency, so it was not total entered, all that kind of thing. We've got our 4 accounts listed out there. So we had assets, liabilities, owner's equity, and in this case the parent for the for net income 95001. We didn't actually change the name for that, but we can see those out there. You can see that they are expandable, so you can see the little triangles to the left hand side. We've got balances, and lo and behold, the actuals balance. It's a miracle. On the right-hand side, we're bringing budget numbers in. Typically you don't have any budget. Well, in this case, we didn't have budget at the balance sheet level, so we got our budget out there. All right, that's that report. We wanted to talk about trending as well. We've got a report. Our report is in a decent shape. Let's see how
we do have a question. Can we go back up?
Absolutely.
I think it related to one of your comments about expansion. Essentially, I'm going to paraphrase the question because it's a little confusing, but essentially, if you expand, does it affect your totals? And I think what they're asking about is there's a limitation in the tool. If you expand a row, you can't use something called an auto calculation. So what that means is if you want all of your children to show, what you would want to do is you would have, you would use a function, and Lee and I went over this in one of our prior sessions. You use a function that's called, get all children or get descendants, I think it is, and it will blow out your parent and it will show all of them. And the benefit of doing that is it shows all of your children if that's what you're trying to accomplish. But you don't have to put a row below it to do a calculation. You can actually create something that's called an auto calculation that will sum the row up for you, and it can actually have different formatting and look exactly like a different row, but it's on the same the same row. But you can't do that if you're doing auto expand. And it really just depends on the story you're trying to tell. Lee and I, if we're creating a trial balance, we actually use that function to get all children, because I can actually essentially do trial balance in one line. In which case, if I do that, I'll create my total. But if we're doing a balance sheet, and usually most of our reports, we will hit the parent, allow it to expand, and then we create the total row, just like Lee did here. So hopefully that answers your question. If it doesn't, please do feel free to follow up, and we can go back to the presentation. We're going to show a trend report now.
Well, actually, I'm going to have one other comment on there. The other thing to bear in mind is how you're consuming this report. If you're generating PDFs for people, expand isn't going to help you at all, because it's a PDF and it's not going to expand. So in those cases, I've seen people, I've built, here is the summary version of it. Here is a detailed version of it where I just say, each row show children of, as Tom was saying, all that AutoCalc stuff to show in there. That way, give me a summary one, give me a detailed one. So if people want to consume this by PDF, or we're trying to archive it out there, we have both flavors of it. Okay, let's have a look. So we're saying we've got our report in decent shape. Let's go to see how we're going to do our trend. So I've got a report that works already. I'm not going to rebuild that report. I'm going to file save as and call this something else. So we had our balance sheet actual view budget. It's going to go straight to file save as balance sheet trend or whatever, because the basics of the report are there. I don't want to have to go through building all that header stuff, all my formatting. I know that that's all good. So we've saved it as a new report, balance sheet trend. The things I'm going to do, I'm going to take out my budget column. So the original report we just looked at had actuals against budget. We also said, I think, that the accounting period was at the page level. So we're getting rid of our budget column. We're then going to move our accounting period from the page down to the column. And we can see that in the screenshot there with that red arrow where it's pointing from. We're also going to change the type of account this is. So we had ending balance previously. Now we're going to do period to date, just to show that kind of level out there. We've got made our changes here. For our column, again, I'm trying to keep this report as simple as possible. I'm still only going to have one column out here. I'm going to select the dimension we had. In this case, it was accounting period. And I'm going to use a function. So rather than picking a specific member, which would be the first tab that would open up, I'm going to go to functions, and I'm going to go to range. I'm also going to select range. As soon as I hit range, it's going to say, how am I going to do this? So, how am I going to get my periods? So for my starting period, I'm going to get a function. I'm still going to my function, and I'm getting my relative member. So I'm going to say, even though you're running this for July, I want the report to start 12 months ago. I'm saying get a relative member. And it is, in this case, my starting period is 11 months ago. So I'm not getting year on year. I'm getting year over where we were 11 months ago. So minus 11 is the starting period. My ending period is going to be whatever period I'm looking at. In my case, I'm a big fan of points of view, just leaving those periods in the points of view. You can certainly do prompts if you want to do prompts, but that means every time you run the report, you have to say which period it's for. I'm a big fan of using that point of view and saying, the last time you looked at any report, you were looking in July of 2024. Chances are, when you look at this report, you're probably looking at the same period, unless you change it. If you're looking at, if I'm closing out the period, everything's going to be for the same period. So it makes sense to have that out there, and it just flows through it. So part of the cash process for you keeps it out there. So we've said that the ending period is my current point of view. Okay, we've now got two columns, but I'm still keeping my first column out there. I'm keeping a first column which had my period. I'm going to hide it. And the reason that I'm going to hide that column, we looked at those at the headings before. The heading really struggles with when I start trying to build my parameters in the headings, it struggles with ranges. So I always have a hidden column which has my period of view, my point of view for that accounting period in it, just so I can refer to it. Again, it's never going to show up. I've said in the top right, hide it always, but that's what's going to drive off my my report. So my title still looks like that. It's still looking at column A, the column I've just hidden, but it's grabbing the period name, the period from there. And that'll give us a report that looks like that. In this case, I ran it for the balance sheet trend as of January 23. First column is February 22, sorry, March 22. This was a 13-period calendar. So March, April, May, June, July. It's the same column, still drillable, still expandable as we go through that.
So a couple things on this one. We really have a lot of tenets that we use when we build these reports. We're very big believers in you want the minimum number of columns, minimum number of rows. And the reason for that is you can do a lot of formatting in these reports. And it really is powerful and it's very good. But the more formatting you do, the more complicated it is to maintain. And the more complicated it is to understand, you know, where your formatting is coming into place. And our experience has been when you keep the rows and columns minimal, you have the fewer number of issues. Now, again, we understand that, you know, look, reports are complicated. And sometimes you do have to have a lot of rows and columns. I will tell you a lot of the reports that Lee and I do, when we do cash flow statements, I almost always have to have multiple grids. I've yet to be able to get a cash flow statement to work with a single grid, but the way I usually do it is I'll do all my calculations and everything in other grids, and I kind of bring them forward into a displayable grid. So this is a really powerful tool. You can do a lot with it. It's a little bit frustrating because it takes a long time to master. But Lee and I kind of picked this up, in 2013 without a lot of training. And we've really kind of grown to be fond of it. And if you can use this tool, it's really the same skill set in EPM. Again, they've got a newer version, which is a little more powerful. But it's similar to concepts that you would use in narrative reporting. So just, it's a good idea to kind of watch these and understand them. Lee is going to, field a couple more questions if we have them. And, we'll hang on. We'll go through the rest of the rest of the comments.
Yeah, actually, that was it. So if we have any questions, start typing them in now. Just to catch up on the items we've got, if you want to follow us on social media, I promise you there will be no pictures of cats or dogs on these accounts. So you can follow Tom at Thomas Simkiss. You can follow me at BT Lee Briggs. Afternoon with Aces is actually on X as well. So AFT with Aces, you can find us there. All these videos are up on our YouTube channel. Wow, that sounded very English. YouTube channel. So you can look for Ampersand Afternoon with Aces. You can find all these videos up there. It's on the Creole website. You can also meet with us at Cloud World. If anyone's going out to Cloud World, feel free to hit us up. Probably best to hit one of those social media accounts if you want to meet up with us. I'm more than happy to have a chat with folks to see what's going on there. As for our next session, the next session is statement of cash flows. It is actually next Friday. So if you have any, if you stay tuned for that one, you can see Tom talking about his multiple grids on that one. But other than that, that is the end of today's session. I don't see any other questions coming in. So with that, we're going to wrap it up and have a great rest of your Friday if you're listening live. And if you're not, have a great rest of your day.